Hello, my name is Jason Mercer, the Toronto Real Estate Board's Director of Market Analysis. With June in the books, we are now halfway through 2017 and have left a traditional spring market behind us. However, this past spring was anything but normal. We have seen a market very much in flux since April, when the Ontario government announced the Fair Housing Plan. With this as our backdrop, let's take a closer look at TREB MLS statistics for June. Greater Toronto Area Realtors reported 7,974 sales through TREB's MLS system in June 2017. This was down by 37.3% in comparison to June 2016. The number of new residential listings entered into TREB's MLS system at 19,614 was up by 15.9% compared to June 2016. While this annual rate of growth was sizable, it represented a more moderate annual rate of growth in listings compared to May 2017, when new listings were up by 48.9% year over year. As market conditions have become better supplied, annual growth rates for the MLS HPI benchmark prices have moderated over the past 2 months, but remain strong. The MLS HPI composite benchmark price was up by 25.3% on a year-over-year basis in June. However, on a month-over-month basis, we have seen diverging trends. Benchmark prices were down slightly on a month-over-month basis for detached houses, attached houses, and townhouses. In contrast, benchmark prices continue to climb on a monthly basis for apartments. June's average selling price for all home types combined for the TREB market area was $793,915, representing a 6.3% increase compared to June 2016. While a better supplied market has certainly been a key factor influencing the moderation in price growth, the average selling price has also been impacted by the fact that the greatest home sales declines were for expensive home types, most notably detached houses. This means the change in the mix of homes sold this past June compared to a year earlier has also had a substantial impact on the overall average selling price. Now, what do we expect to see moving forward? Well, first off, the Ontario Fair Housing Plan, which included a 15% foreign buyers tax, has prompted some households to put their decision to purchase a home on hold, at least for the short term. However, the Ontario government recently released their first wave of foreign buyer statistics, which confirmed earlier TREB research that showed foreign buyers, even in the pre-Fair Housing Plan era, represented a very small proportion of overall home purchases, slightly less than 5%. This, taken along with the strong buyer intentions reported by Ipsos in their spring survey undertaken for TREB, suggests that we will see many households moving back into the home ownership market over the next 12 months, possibly after reassessing the type and/or location of the home they plan to purchase. While the impact of the Fair Housing Plan may be temporary as it relates to home sales, it is important to note that the probability of higher borrowing costs over the next 12 months has increased. The consensus view is that the Bank of Canada will raise its target for the overnight rate at least once in the second half of 2017 and perhaps more than once. Prospective Bank of Canada increases have already been priced into Government of Canada bond yields and posted mortgage rates, at least to some degree. Advertised discounted mortgage rates, however, remain at or near historic lows. Taking into account both the temporary impact of the Fair Housing Plan and the further impact of higher borrowing costs, TREB's forecast range for home sales through its MLS system in 2017 has been revised downward to between 89,000 and 100,000 transactions. More balanced market conditions, with sales accounting for a smaller percentage of listings in the second half of 2017 compared to the first half, and particularly in the first quarter, will influence the average annual rate of price growth. The overall growth rate for the average selling price in 2017 will be between 13% and 18%. While an annual rate of growth in this range will still be very strong from an historic perspective, it's important to note that it will also represent a moderation in year-over-year average price growth in the second half of the year. Obviously, we should expect a certain amount of volatility in the marketplace over the next few months as would-be home buyers and home sellers get a better feel for their positioning in the market. We will obviously be watching the market closely and be reporting on a regular basis. With this in mind, I look forward to speaking with you again at the beginning of August. Thank you very much.
Brought to you by GTA Realtors.